Welcome back. Tesla CEO Elon Musk shocking Wall Street this past week, putting out a tweet that he is considering taking Tesla private, igniting a firestorm of speculation about how he can pull it off and real legal questions on the accuracy of his claim that funding was secured. He said, "I'm considering taking Tesla private at $420 a share, funding secured." I spoke with the former chairman of the Securities and Exchange Commission, Harvey Pitt, this week about that on Mornings with Maria. Here's what he told me.
Entire announcement was highly problematic and unprecedented, and it's important to realize it's not the medium, but it's the message. Going private transactions are usually announced in advance of the market opening or after the market closing. They're not announced in the middle of the day. Mr. Musk tweeted in the middle of the day. In addition, it's not the CEO who announces this, but it's the board. It's the company that makes this announcement. But here, it was the CEO. What's more important is he stressed that he already had funding to pay $420 a share. But no efforts have yet been done to find out whether it's in the shareholders' best interest to take the company private, and if so, at what price. So all of this raises two fundamental questions. First, was he trying to artificially influence the price of the stock? If he was, that would be manipulation. Second, does he really have the money in hand, and is it a binding commitment that would give him almost $70 billion in what would be the largest going private transaction in U.S. history? That would be fraud if those things were not true.
Okay, so the SEC then needs to better understand what he was referring to when he said $420 and funding secured. Where would that money come from?
Well, it could come from either a consortium of banks. It could come from a foreign sovereign investor. I mean, the company did receive a big cash infusion from Saudi Arabia the day that earnings were announced this past week.
And joining me right now to react on that and a lot of other things, the Internet of Things, Rodgers Capital CEO, the founder of Cypress Semiconductor, T.J. Rodgers joining me. Cypress was actually produced the chips that ran the control panel for the original Model S Tesla. Your thoughts on what took place in terms of Tesla this past week?
Well, I think Tesla is not a mature enough company yet to be a public company. The prior guest, indicated that, and I think going private might be good for them, so they can get their company more mature before they're dealing with the public.
I mean, taking a company private at $420 a share where it is now, you're talking about $70 billion. We'll see if he has the funding. He said he has the funding. The board on Friday said we haven't seen a plan. So this is sort of out there. And we know that the Wall Street Journal did report that the Securities and Exchange Commission is, in fact, looking into this. So we'll keep watching that. But, TJ, I want to ask you broader commentary, get your broader commentary on the Internet of Things and where we are in terms of growth within technology. Where do you see the growth?
The Internet of Things is a big deal. I currently have a company, a little company in San Jose that we've dubbed their technology as the Internet of Plants, and that is we're hooking fields of plants up to the Internet of Things and then having the IoT then control the valves for their water. So if you count how many plants or fields there are in the world, the Internet of Things is going to grow exponentially when things like that get added to it. It's a big deal.
China wants to own a lot of these industries. You know that, TJ. They want to own AI. They want to own blockchain. And we're in a dispute with China right now. What are your thoughts on the tariffs and the pushback that President Trump has made against China?
Well, first of all, China's a great place to make stuff. They're very efficient. Their quality is picking up. So the average American gets a better deal by being able to buy goods from China. Having said that, they're setting conditions for making and exporting things to us that are unfair and unreasonable. For example, if you have a technology and you want to sell it to China, you have to make it in China, and you have to give your IP to the factory that makes it. Okay, you have to give up your technology in order to sell to China. That's unreasonable, unfair, and we're pushing back on that hard. And I think that's a good move.
Yeah, because they've been stealing intellectual property for decades. We know that. They forced the transfer of technology to Chinese companies from American companies, as you just noted. Is Cyprus in China? Tell me how you've dealt with this issue.
Well, you have to be very, very careful with your IP. You have to work with this is a company-by-company thing. It's not a countrywide cabal. So you have to work with companies that have high integrity. You have to encrypt things. You have to have contracts that show you've transferred IP. You have to have Chinese patents. Because of pressure, they're starting to enforce patents. But you have to do a lot of work in China to make sure you don't get ripped off.
So you've said before you think China blinks first on this.
I do. Because it's simple. You know, our trade going to them is this big. Their trade coming to us is that big. And basically, if you cripple both arrows, the big arrow is going to get crippled more dollars, and they're going to have to blink. President Trump said it's easy to win a trade war. We'll see, but that's the reason for it, the asymmetry of trade.